Hi guys, good morning and welcome to this Money Control live stream. You're watching Opening Bell with me, Nandita Khemka. Well, after what a stellar, turnaround we saw in the market in the last half an hour of trade. You can call it the weekly expiry effect, or the data in terms of voter turnout that was released for the fourth phase. Of course, the turnout has been much better. Perhaps the markets were reacting to that as well. But a sharp turnaround, and the Nifty managed to reclaim that 22,400 mark and ended above that 20 DMA level as well. The Nifty Bank Index, also edged higher, but 48,189. That is the 20 DMA level on the Nifty Bank Index. So that will also be in focus. Of course, lots of stocks, in news this morning. Vedanta, PB Fintech. We'll also be decoding numbers from Vodafone Idea as well as Biocon on the show. And we'll also be getting all your stock-related queries answered on the show. So if you have any queries, keep them coming in on our live feed on YouTube. We'll try and get them answered. And I also promise you that I'll get you a big voice later on in the show. And he will be sharing his thoughts on how to really navigate the markets, the volatility we have that we have seen in the market, and how really you should go about investing at the current juncture. But all that coming up in the next 40 minutes. Right now, let's take a look at the top headlines at this hour. Dow hits a momentous milestone, conquers the 40,000 level for the first time in intraday trade, but key indices end off session highs. Meanwhile, Asian markets open mixed, tracking losses on Wall Street, and the GIFT Nifty is suggesting a flat but positive start for the Indian market. Oil prices rise amid a fall in crude inventories. Brent stays above that $83 barrel mark, while gold prices come off recent highs as the dollar index rises. Biocon's fourth quarter revenue and margin beat estimates, but profit misses expectations, while Vodafone Idea delivers a stable fourth quarter, even though losses have widened, on a quarter-on-quarter basis. Capex over the next 3 years is seen as at 50 to 55,000 crore rupees. And also in focus will be PB Fintech, as directors will sell about 1.86% stake in the company via a block deal today. Well, just about 10 to 12 minutes to go for the markets to open. Let's see what kind of cues we are looking at this morning. The Nifty spot shut shop at, the Nifty shut shop at 22,400 mark, almost a percent higher. Of course, it's the last half an hour of trade that saw a very sharp swing, and we ended almost at the high point of the day. India VIX, eased for a third straight day, but it stays above that level of 20, a crucial level of 20. As we step into the June 4th election verdict, volatility is expected to continue in the stock markets. If you look at the F&O cues coming in for the May series, the Nifty open interest was down 2.7%, shed somewhere around 2.8 lakh shares or thereabouts. The Nifty May futures trading at a premium of 48.5 vis-a-vis a premium of 69.2 in the previous session. Nifty Bank Index, for that the open interest was down 2%, shed somewhere around 50,000 shares. And if you look at the put call ratio, that has jumped to 1.19 vis-a-vis 0.92 in the previous session. Stocks in the F&O ban list, Bandhan Bank is the new entrant, but a whole host of stocks are still in the F&O ban, including the likes of Balrampur Chini, Biocon, Granules India, India Cements, Birla Soft, GMR Infra, Hindustan Copper, Vodafone Idea, Piramal Enterprises, SAIL, as well as Z. Z, by the way, also reports its numbers today. LIC Housing Finance has managed to come out of the F&O ban. Foreign investors remain net sellers in the Indian market. They have sold 775 crore worth of shares in the cash market in yesterday's session. But we have seen buying support coming in from domestic institutional investors, and they have been buyers to the tune of 2,100 crore rupees or thereabouts in the cash markets. But with that, let's see whether we have our technical expert ready or not. Jay Thakkar, who's the head Derivatives and Quant Research at ICICI Securities, joining in this morning. Jay, great to have you on the show. How would you really look at the last hour pop that we saw on the benchmarks yesterday? Would you expect the upside to continue today, and would you play for a higher level in terms of resistance? What would you be watching out for on the Nifty? Jay, is my voice reaching you?
Good morning to you, Nandita. Yesterday's Yeah, definitely. So good morning to you, Nandita. I would say that the last hour recovery was definitely quite sharp in yesterday's session, on the day of Nifty weekly expiry. And one thing interestingly, what Nandita will tell you is that Nifty sort of has formed a base ahead of the election results, is what I believe. 21,800. On the upside, also, I think that it has formed a meaningful top or short-term resistance at 22,800. So I see that the volatility is going to stay because Nifty has to now trade within this range of 1,000 points, I believe. If it goes up, sellers are going to be active. If it comes down, then the buyers are going to be active. So I think that any day should be buying opportunity. On the upside, I believe that 22,500, 600, these are the levels, some hurdle. But on the flip side, 22,200, 22,000 levels, those are the good short-term support levels as well. For the intraday, I would say that 22,300 to 350 band. I heard you talking about 2040 DNA as well. So those are the good support levels as well, as you rightly pointed out. So for the intraday, 22,300 350 range. On the upside, 22,500 to 600, these are levels. But then index is going to be trading with the range. The Bank Nifty inched above 48,000 levels, but then I would say that it did not close above 48,000. So above 48,000, if it goes, then yes, it may inch towards 48,250, 48,500. But then prior to election results, I think that it too is going to stay in a range of say 46,500, 47,000 downside, 49,000 on the upside. So there's 2,000 to 2,500 points range, and on Nifty we got 1,000 points range. It's going to be trading within this band only unless you see a breakout from the either side.
All right, those are the levels to watch out for on the Nifty Bank and the Nifty as well. But let's also take a look at some of the stocks that will be in focus today. Of course, China industrial production data just came out a few minutes ago, and it has topped estimates by a wide margin. So metal stocks will hog the limelight in today's session. We'll have to see whether or not we see a good rally coming in on the metal stock today as well, because metal stocks have been shining bright off late, and Vedanta in particular will be in focus given the fact that the board has approved a fundraise to the tune of 8,500 crore rupees. However, the vehicle of fundraise has not really been decided yet. They could look at issue of shares or other securities, and the company will of course use the funds to retire or to pay some of its debt. So this is one stock that will be in focus. Another stock that will be in focus will be PB Fintech. There has been a large trade, that large block deal has happened. 1.8% equity or 1.86% equity has exchanged hands in two block deals in the block deal window. 83.7 lakh shares they have exchanged hands here. The promoters have sold stake. They will be using the funds for tax payment as well as future ESOP exercises. They've also said that there will be no further stake sale over the next 1 year or so. The floor price of the block deal was set at 1258 rupees a piece. That was 6% discount to yesterday's close price. Another stock that will be in focus will be Vodafone Idea. Remember, a lot of brokerages have been coming out with very bullish reports on Vodafone Idea, especially after its fundraise via the FPO route. If you look at what Citi has to say, they have said that the bull case target would be 25 rupees on the stock. So it's like almost double of the price that it's quoting at right now. But numbers came out yesterday. Losses have widened a bit, 7,674 vis-a-vis 6,980 crore rupees on a quarter-on-quarter basis. Revenues are down 0.5% or thereabouts, and margin has seen a slight uptick, 40.9% vis-a-vis 40.8% in the last quarter. The capex is seen somewhere between 50 to 55,000 crore rupees over the next 3 years, and average revenue per user has also improved to 146 rupees in the fourth quarter. So that's one more stock that has been focused. Biocon as well has reported numbers. Profits are below estimates. In fact, profits have halved on a YY basis, 57% down for Biocon. For PB Fintech today, there's been a block deal in the section. Last 1 week or so, it has gained 10% or thereabouts. Any particular level you'll be watching out for on PB Fintech? Is there a trade?
See, this is not in the FNO, so I do not track that very closely, so would not be able to comment on the same.
No worries. Hold that thought, Jay. We will be talking about a whole host of other stocks and getting all our queries from the viewers addressed as well. But the markets have opened up, and we have opened with a negative bias. Yesterday we ended at 2-week highs, and thanks to that last hour pop that we saw. But cooling off a bit at highs. 22,375 is where we are at. But the mid cap index has opened with a positive bias. 0.2% higher for the Nifty mid-cap index. And if you look at the advanced decline ratio, they are tilted in favor of gainers as of now. So breadth is positive. Small cap index is also holding out. 0.4% up, uptick coming in on the small cap index. If you look at some of the other sectors, Bank Nifty has cooled off 100 points down for this particular index. 48,189, that's the 20 DMA level on the Nifty Bank index. That would emerge as a crucial level to watch out for, but right now it is a tempered start. So we'll have to see whether we manage to stage a rebound and make a dash at that 48,000 mark today itself or not. We'll be watching out for that. But let's pull up the Nifty metal pack. In light of the positive China data, there were expectations of some bit of an uptick in the metal pack. Yes, exactly. That's exactly what's happening right now. 0.5% uptick for the Nifty metal pack. Aside of that, let's take stock of what IT is doing. That was the top performer in terms of sectoral movers yesterday. Cooling off a bit, flat with the negative bias. Let's see what the realty pack is doing. That particular pocket has also been witnessing quite a lot of buying interest. Yes, it continues. 0.5% uptick for the Nifty metal pack as well. So all in all, it's a tempered start for the market, but the broader markets are holding out and some pockets are holding on to gains. Let's take a look at some of the individual movers on the index, and M&M is up another 5%. There's an upgrade that has come in from Jefferies, and they have hiked their target price significantly higher for M&M. So reacting to that, another 5% up move. Tata Motors has also staged a rebound today. Yesterday, remember, it was among the top Nifty losers. Today, it's the second top gainer on the Nifty 50. Grasim, UPL, Tata Steel, Bajaj Auto, Coal India, Hindalco are some of the other gainers on the index. On the flip side, you have Axis Bank, that's the top Nifty loser, followed by Asian Paints, HDFC Life, SBI Life, Adani Ports. Reliance Industries also witnessing some bit of profit booking, and all the FMCG names, some of them under pressure. Nestle, Hindustan Unilever, Britannia, all of these under pressure. Infosys, HCL Tech, Wipro are also witnessing some bit of selling pressure after yesterday's up move. Looking at the market right now, Jay, what would you what would you recommend in terms of stock picks for our viewers this morning?
Sure, I have a couple of ideas. I would say one of which is Axis Bank futures. I think that it's a good opportunity to buy on dips today. Nandita, Axis Bank futures can be bought at the current levels. I think that the stock has in fact provided a nice breakout in yesterday's session from a downtrend line resistance. Overall, if you see, then we had seen a good short covering coming in April, followed some short covering in May as well, and now the stock was consolidating for a couple of days between the levels of say 1100 to 1130. Yesterday it broke above those levels. This retesting is what I believe today. So Axis Bank can be bought. One can place a stop loss. Axis Bank futures, I would say one can place a stop loss below 1120. Right now the future price is at 1135. So one can buy this, targeting around say 1165 to 1180 on the upside. I think there can be some bounce back out here, and this can support the Bank Nifty overall. And this is the only stock, Nandita, wherein I'm very confident about the entire banking back. Otherwise, most of the stocks are trading with a sideways to negative bias. This is one stock which is really showing some strength on the lower side, some buying interest on the lower side. The second buy recommendation is from the metal pack. I mean, Jindal Steel. I mean, this has been one stock, Nandita, which has been trending quite higher. Today also it's up. And one can buy the current levels, one can place a stop loss below 985, and one can target 1040, 1060 going forward. Jindal Steel broke out from a large consolidation, and thereafter it's continuously forming high tops, but it's not even closing below its 20 DMA. The momentum indicator here has been quite positive. Also looking at the derivatives data, we are seeing some good long build-up here as well. The final buy recommendation would be on Syngene, because I believe that pharma index Nandita, has been consolidating within a range, and in that process, it has formed a nice symmetrical triangular pattern. So yesterday, Syngene finally, reversed the trend by forming a hat of sag bottom. We are seeing some short covering out here. So it can be bought, at the current levels. One can place a stop loss below 677 and target 710 to 720 on the upside. Syngene, technically also, if you see, has formed sort of a broadening triangular pattern. Nandita, and it has reversed again almost for the fifth time from the lower end of this broadening triangular pattern. So I believe that there is a very high probability of a short covering out here.
All right, those are the stock recommendations from Jay. Jay, hold that thought. We'll come back and talk about more stocks, and we'll also, address our viewer queries as well. But let me also bring on board the big market voice that I promised at the start of the show. Joining me is Andrew Holland, who's the CEO at Avendus Capital Public Markets Alternate Strategies. Andrew, always a pleasure chatting with you. Let me first ask you about what's happening in the US market, right? It was a momentous occasion for the Dow, right? It has hit that 40,000 mark for the first time ever. And let me tell you that the journey from 30,000 to 40,000 has been the fastest ever. It has been covered in 3 years, 5 months and 2 weeks. And this despite the fact that the rate cut cycle hasn't really begun. Would you say that, US markets are in the bubble territory right now? What are your thoughts?
It just seems to me for the US markets, two things. One is that the larger companies become gigantic companies, and I think that's what's driving the markets. It's the Magnificent Seven, as we've talked about before, has been the big driver, and of course AI as a theme is played across multiple kind of companies and sectors now. So that's what's whether you want to call that a bubble, it could be overvalued in the very short term. But of course, AI is not going away from us, so it's really how companies capitalize on that. And the likes of, say, an Nvidia is obviously getting blockbuster orders and revenue. So that's what's driving the market there. You could say actually, conversely, that when interest rates fall, maybe that's the the time that the markets will correct. And of course, we've got elections there, Nandita, later this year. And whilst I'm not saying that Trump will win, I think the market likes Trump. And the equity markets like Trump because they think about lower taxes and more policies which would be market friendly rather than his controversial kind of policies towards global trade and other factors. So markets like Trump, they like the fact that he might get back.
All right. Given the kind of commentary that's coming in from various Fed members and the spate of the data that has come out of the United States, what is your own prognosis? Would you say that, September is when we could see the start of the rate cut cycle? And would you concur with the fact that it could be a very shallow rate cut cycle in the beginning?
Yeah, Dita, it's we kind of switched from one day to the next, right? So yesterday, if we would have been on speaking to you then, I said, well, the likelihood is now two rate cuts for the year. But after 3 Fed speakers yesterday, we've moved back to one. That's probably pushed back to December. Politically, I'm wondering whether the Fed might do something in September ahead of the elections. It's a possibility. But I would have thought if they do a rate cut in December, it might not just be that 25 basis points. It might be a lot larger to keep the markets and happy. And the fact that the data would be showing at that time that there has been a slowdown and it's meeting the 2% inflation targets. But remember what Jerome Powell is saying, the Federal Reserve Chairman. He's saying inflation might take a lot longer to get to the 2%, and that's telling you that he's okay with that. So interest rates could still fall even if inflation does not hit that 2% target.
So are you saying that the higher for longer narrative that some of the Fed members have been maintaining could not hold?
I think so. I think you'll start to see the data slowing quite quickly, particularly on the services side. And the thing that's holding it up is rents, and we're starting to see that come under pressure. And I've just noticed, I saw an article somewhere saying that a number of these real estate funds are getting huge liquidations in the US, and that's causing problems. So there's something up with the commercial real estate sector in the US, I think, and I think that would also worry the Fed. So they could do something a lot more quicker than the market expects. That said, I think I was listening to you before about the IT stocks. I think you've probably got another quarter to wait before dipping your toes in the IT stocks at the moment.
All right, wait for another quarter before dipping into IT stocks. But back home in India, Andrew, we've seen a fair bit of volatility, crazy last few weeks, so to say. But would you advise investors to stay on the sidelines till the 4th June verdict? And second question, there's been no sign of FIIs making a comeback right now. Perhaps they are going to China, which is appearing much more cheaper compared to the Indian markets, right? But post elections, do you see a trend reversal when it comes to FII flows as well?
Yeah, whether the FIIs are just hedging their position, it's always difficult to say, Nandita. I would have thought so. That's probably one of the things that they're doing, just to put an event risk. But I think thereafter, if whichever government comes in, if the policies are stable policies, the policy continuity is there, that's what the market likes. It just doesn't like uncertainty. Right? We're not quite sure. We'll go through these ups and downs, and we've seen that, right? We saw the market kind of being, moving ahead at the early start of the kind of election process, few jitters with the voter turnout, that being turned around. So we're back to where we were, really. I don't think it's something I would worry about too much before the election results. And thereafter, if you don't like volatility, stay on the sidelines and you can wait till the results come out. And if you miss that initial rally or whatever it is, you can always get back in the market. It's not a short-term play. You've got a longer-term road ahead of you. So I wouldn't worry too much.
But would you not worry about valuations and, because most of these sectors, the likes of industrials, for example, have run up quite a bit, and some of those stocks are trading at 70 to 80 times their forward earnings, which is like unreal, right? The likes of ABB, Siemens, Honeywell as well. Numbers have been good, and the stock reactions have been enormous as well. So would you say that people who are not invested in these pockets have missed the bus, or do you still see an investment case here?
Nandita, I think what you should do is say, what are the earnings going to be in 3 years' time? And I think if you do that and then work out what the PE will be, are you buying it at a cheap PE, depending on the growth factors that you're looking for? But in all of these companies, you've seen stellar results. And it's because, and we talked about this before, it's not just the normal capex cycle of roads, bridges, etc., which are low margin. It's the kind of railways, it's the smart cities, smart manufacturing. That's where they're going to run the huge margins. So unless you're saying that theme is going to slow down, which I don't see it happening, these companies will continue to deliver stellar growth. And therefore, whether you think it's run up too much, in the short term, it might have done that. But in the longer term, I think these are stocks which will continue to deliver both at the top line and bottom line, and I think that's what you have to look at.
Right, two pockets really I want to talk about. First one is FMCG. The pocket has underperformed, right? This has been an underperforming pocket in the market. But although numbers have been subdued, but management commentary has been fairly upbeat, especially in terms of rural demand picking up. Premiumization was already working, but now if rural demand picks up, that would be an added advantage for FMCG. So from a valuation standpoint, would you look at FMCG as a investment theme now?
Yeah, they delivered above expectations, and the market was caught by surprise on this one, and that's why you saw some of the share prices move higher. I'm not buying into this rural economy pickup quite yet. And they haven't really shown it in their results, or the fact that their commentaries, the narrative is positive, but I'd like to see it really being delivered in their results. So I think the way I continue to play with FMCG is premiumization, which you mentioned, But I played through the beverage sector, both alcoholic and non-alcoholic. I think that's where you'll see the longer term trends playing for you anyway, without necessarily having to depend on the rural economy to do that for you.
Right. Of course, we saw shares of Radico Khaitan stage a very good comeback, rally rather, in yesterday's session. New Street was really raising a toast to that one on the back of good numbers. But banks, private banks in particular, what's your prognosis after the fourth quarter numbers? They have surprised on the margin front, but deposit growth remains subdued. Would you nibble into private banks now? Because valuation wise, they are looking fairly good compared to their PSU counterparts.
Yeah, so Nandita, coming into the results season, we said there was two sectors which could have a positive or negative impact on the market in the short term. One was IT, if it's close to the bottom, which it's not, and interest rates have been pushed out, so we can IT is not going to be the sector to move the market. Banking, in terms of the NIMs, net interest margins, it looks as though they're close to the bottom now. And the narrative was very strong. So from the banks, so that was a catalyst. You saw the market move up and the banking sector leading it. But then there's been a few regulatory kind of issues. One with obviously Kotak Bank, which we saw, another about probably project financing. So it just took the kind of the kind of enthusiasm or promise of the banking sector moving up just back on the sidelines again. So we'll have to wait and see what some of those policies are, how quickly Kotak can get their kind of technology up and running. But if it's within 6 months, then I think the market would like that.
Lastly, I want to get in your thoughts on the new age tech firms. Some of the companies have reported stellar set of numbers. Zomato has been one, PB Fintech, Car Trade, all these companies have reported good set of numbers. Of course, Paytm has its own set of issues. So, excluding Paytm, how are you viewing this entire new age basket now? Do you think the managements or the companies will have to do something special to keep the momentum going?
No, I don't think so. I think, Nandita, I think where the worries were some 6 to 9 months ago was, about cash flows and profitability. I think all of these companies are now showing that that's not something to be worried about. So now we're focused more on the growth, looking forward, and not just saying it's going to be profitability. So I think we've passed that hurdle. So I'm very excited about, and we've been invested in these companies now for the past 6 to 9 months, and they've done particularly well. Don't get me wrong, but we think there's still more steam left in this kind of segment of the sector, because I think it's still very early days in India's evolution in some of these areas. So again, great story.
Lastly, very last question, so to say, any favorite themes with a medium to long term perspective now? You've mentioned premiumization and, liquor stocks and beverage stocks, so to say, but anything else that is on your buy list now?
I think, the usual suspects, Nandita, would be obviously defence spending, railway and renewables are going to be areas which whichever government's in power would need to be spending on. But the one that I still continue to think that with the very beginning of the runway is hospitality and experiences. I still think there's a lot more that's going to be garnered from not just the airlines, but the hotel companies going forward, restaurant companies as well, where the spending is going to continue, experience is going to be kind of wanted by people as they travel. And I think that's it's just a great kind of medium-term story. As per capita GDP also passes $2,500, you'll see more and more people looking for experiences, and that's what I think will drive these stocks and earnings for them going forward very strongly.
All right, those are some of the themes that one should really keep on their radar. With that, Andrew, I'm afraid we are running out of time, but it was indeed a pleasure chatting up with you. I look forward to a longer conversation with you sometime soon.
Thank you, Nandita. Thank you for the opportunity.
Thanks a lot for joining in this morning. Well, with that, let's go back to Jay, who's been waiting by. Jay, before I take up viewer queries, I want to ask you your thoughts on CG Consumer. The stock is up nearly 13%, has hit a fresh 52-week high. what is the strategy you will watch out for here? Would you look for levels of 400 plus on this stock?
Well, I think yes, there is quite a possibility of that, Nandita, because the overall setup is quite positive, and I think the stock has the overall momentum indicators have also been quite clearly positive in the stock. So I think yes, going forward we will be seeing high levels coming in the stock as well. The broader markets, I would say, Nandita is doing quite well relative to the large caps as well at these levels, despite volatility going up quite a lot. So we have been seeing that these stocks have been in a really good uptrend.
All right, that's the view on a CG consumer. Let's take up, some viewer queries that are trickling in this morning. First one is coming in from Rajiv Sharma, and he wants to know your thoughts on a solar industries. The stock is up 5.5%, and over the last 5 days we haven't seen much traction, but today it is up and about. Is there a trade here? Should one buy into it?
Well, see, solar, after having provided a breakout from a symmetrical triangular pattern, consolidated, and in that process it formed a falling channel. It has taken a good support technically at the lower end of the channel around the levels of say 8100. From there it has bounced back quite well today. So it can reach towards 9100. Now, above 9100, there would be a clear breakout of this 1000 points consolidation, which will help it to move beyond 10,000. So, you can see this stock coming in 5 digits once it surpasses 9100 levels.
All right, that's the view on solar industries. Hope that answers your query. The next one is coming in on the QSR space from Chirag Hadilal. He wants to know which stock is looking better on the charts now, the likes of Jubilant Food, Devyani International, Sapphire. Anything looking interesting here?
Definitely, Sapphire Foods, I think, is looking at current levels. I mean, why? Because this stock, Nandita, has been consolidating within a range, and the range lower end is around the levels of 1300. On the upside, the upper end of the range is 1600. So, from the risk reward point of view, I believe that there is a good chance that this stock again moves back towards the upper end of the range. So, with a stop loss below 1300, one can buy Sapphire.
All right, Sapphire, that's the stock to buy now. Hope that answers your query. The next query is coming in from Rupak Mehta, wants to know your thoughts on whether to enter into a Coal India right now. The stock is very close to its 52-week highs. Would you say at these levels the risk reward is looking attractive, or would you say wait for dips and then get into this one?
From the short-term point of view, Nandita, I think that yes, the stock is in a clear uptrend still, and 450. 55 zone is a very good support at the lower end. Till those levels are held, it can reach towards 490 as well. So from the short-term point of view, yes, there is a bit risky. But from the long-term point of view, I think that if at all there is any correction, say towards the levels of 400, this stock definitely should be added from the long-term point of view as well, because it has established a structural long-term uptrend. Once it broke above the levels of 270, Nandita. So the overall rally which we have seen is a part of a bull market. So any dip going forward, if at all, should be utilized as a buying opportunity. That would provide a good risk reward thereafter.
All right, that's the view. Hope that answers your query. The next query is coming in on an Indus Tower from Pankaj. Vedanta we've already discussed, so you may go back in the feed and see what Jay had to say about it. But for Indus Towers, the stock has seen an 80% up move in the last 6 months. Would you say that after this kind of an up move, the stock is somewhere around that overbought zone, or do you think it's fine and you can play for higher levels?
Definitely, in the short term, I believe that the stock has corrected also quite a lot from 365 to 320. I mean, it has replaced almost 38% of its previous up move. Nandita, and the stock has been trending higher in the first sloping channel. It took a good support at the lower end of the channel, which coincided with this 38.2% retracement level. So I think that now until 330 levels unbroken on the downside, 330. Till then, there is a high possibility that again you see a lifetime high coming in Indus Tower, wherein it would take off its previous highs of 365, 367, and probably inch towards 390, 400 zone as well. So the risk reward is favorable even right now, because the weekly, monthly momentum indicators, which are the positional momentum indicators, they're still well in the buy mode.
All right, that's the view on an Indus Tower. Hope that answers your query. Kishore wants to know your thoughts on Zensar as to what he should be doing with the stock at current levels. After a good 5% uptick over the last 5 days, the stock is witnessing some bit of selling pressure today. Should he use this should he use today's dip to get into it?
I don't think so. Zensar, as you said, has been consolidating, and I think the breakout on Zensar, Nandita, technically in the very near term, would be about the levels of 660. I mean, if it manage to close above 660, then definitely one can buy because thereafter it would be a range breakout almost 100 to 150 points. So you can see the levels of 800 as well, approximately above the levels of 660. As of now, there is a chance that it might continue this consolidation at least until when this breakout is not coming. So, if it all breaks down below the levels of say 600, then it would reverse the trend as well from sideways to negative. So I think holding back right now and adding this stock from the short-term trading point of view above 660 provides you a better risk reward and a good entry point as well.
All right, that's the view on a Zensar. But Z Entertainment, this is one stock that is near about its 52-week lows. It continues to be in the FNO ban as well. We have a query coming in from Sukruta, who wants to know your thoughts on how to trade into Z. Any advice?
Overall trend is definitely negative. The stock has been in a band period for long now. We've seen good short build up out here. There is no reversal as of now in this stock. So I would like to say that if you don't have a long position, really avoid. Shorting at these levels will definitely be not allowed because it's there in the FNO band period. But if you are already long, then I think you should be looking out to exit this stock because overall trend is negative. It has got a support at around the levels of 112, 115, which is a major support. It is still around 20% lower from current levels.
All right, that's the view on Z. The overall trend remains on the negative side. But I want to quickly squeeze in a couple of more queries. From the railway pack, Railtel, does it warrant a buy now? Sudarsha wants to know your thoughts.
Well, Railtel above 420, definitely it would be a breakout, and above 420, it would thereafter make a lifetime high. You can see this stock above 500 as well. The risk reward thereafter it would be favorable. You can place a stop loss below 390, so there would be around say 30-point downside risk, but thereafter the upside potential could be as high as 80 to maybe 100 points. So above 420, definitely one can enter. Else it might just consolidate between 420 to 360, 390 levels.
United Breweries, that's the other query I can spot on our feed. The stock has been pretty much sideways. Last 1 month, it hasn't done much. And, in the last 5 days as well, it has remained sideways. How are you approaching this particular counter?
Yeah, it has in fact been sideways, I would say, for some time now. But then overall, I would say that the stock provided a very nice breakout above the levels of 1800, 1860. It has come down to those levels. Now, from here on, if it manages to bounce back and move beyond 1900, 1920 levels, then I think one can again get into this stock, placing a stop loss below 1870, 1880, and then look out for levels above 2100, 2200 as well, which was it with recent all-time highs. The consolidation which UBL actually formed, it was a long consolidation, Nandita, from November 21 until recent April 24. So that was almost more than 2 years of consolidation which we have seen in UBL, which has broken out on the upside. Now, whether it sustains or fail would be confirmed above 1920 levels. So if it moves beyond 1920 again, you should be trading on the long side as that will increase the upside potential.
All right, that's the view on United Breweries, and this wraps up our query segment. But we are trading tomorrow as well, Jay. So for the rest of the week, like for today, the rest of the day and for tomorrow, any particular FNO strategy that one should adopt?
Well, I would say that, going forward, markets are likely to trade within this band, as I said, of 21,800 to maybe 22,800. So what one can look out for, at least, until we're not seeing a breakout coming from this range, one can create a neutral strategy, an iron condor strategy on Nifty, wherein one can sell, say, 22,600 call on the upside. Currently, it's around 350, the spot. So it's 250 points up, and on the lower side, you can sell 22,000 to 22,100 put option. So that would create a short strangle. But then you should also be hedging as the volatility is already high. So what you can do is you can buy 22,800 call option on the upside and 21,800 put option on the downside. So this will help you to gain maximum from the theta gain if at all going forward it happens, because I don't see expiry beyond these levels in the monthly expiry. So this strategy would be for the monthly expiry. So sell 22,600 and 22,100 call and put options, and hedge them with, or maybe sell 22,000 put option and hedge them with 21,800 and 22,800 put option and call option respectively, by which you will gain with this sideways momentum. The volatility will be higher within this range, but then after all, what will happen is the expiry will happen within this range of 22,000 to 22,600, and that will help you to gain from the short triangle, and there will be you will be paying some premium, some cost to hedge the strategy, but then you'll be having a defined profit and defined loss strategy.
Right. All right, that's the FNO strategy to adopt both for the next few sessions and of course for the monthly expiry as well. With that, Jay, thanks a lot for taking out time and joining in this morning and sharing your thoughts with us. Look forward to touching base with you sometime soon. Well, with that, we have come to the end of this edition of Opening Bell. The markets are trading with a negative bias, but 22,350 is holding on. I mean, in fact, the Nifty is holding on to that 22,350 level as we speak. M&M, that's the big winner today, extending gains from yesterday, 7% higher on the on the charts today. But with that, thanks a lot for tuning in and watching Opening Bell. Stay tuned to Money Control for all your other news and updates, and come back and join us on Closing Bell at 3:30 p.m. Have a good day.